All right. Well, it's absolutely flat for now. 5-point change on the Nifty. What 18,400. Nifty Bank is down a quarter percent, almost a quarter percent now. So tantalizingly close, but not quite there at the all-time high. The open itself, by the way, was on the Nifty Bank was 43,963, and from there we've slipped a little bit more. On the Nifty Bank. Okay, let me just quickly highlight what else is happening, because market, it's too early to look at the market breadth, and it usually does close in a little bit, but it's overwhelmingly positive. Suryodaya Small Finance Bank, I think that is up 5.5%. That should come up on your screen. It's coming up with very large volumes, and that's the reason why I'm highlighting it. Repro India, this was on the sort of Nimesh's chatter list yesterday in the afternoon. There was some institutional institutions which sold, some well-known investors who came in. The stock was up 20% yesterday. It's up another 12-13% this morning, and large volumes once again on Repro, by the way. There is Vesuvius India, which is up 20%, limit up, and it's the number 2 volume traded gainer. So I don't remember the last time I mentioned Vesuvius at 9:18 in the morning, but it is there. Tube Investments is up 4%. Again, strong volumes for this time of the day. I think Nigel mentioned ITD, that is there as well. Sonata Software is at I think practically 50, all-time high actually. It's up 60% this year so far, 9:30. We just had the management with us. Oil India is up 2%. Union Bank, and I can go down the list. LIC Housing, Bank of India. Policy Bazaar is starting at about 613. Stocks up about 2.25%. Root Mobile, Dr. Lal Path Labs, and so on and so forth. So volumes thin out, so not very much there. If I go down to some of these names. So that's PVR Inox is down 2.5, reacting to results, and of course you'll hear from the management in a bit from now as well. Adani Transmission, the Adani Group stocks all came under pressure yesterday. I mean, actually they have been under pressure over the last couple of days, and this morning I can spot one which is starting the day a little lower. So that's basically what we have. 6.7 points lower on the Nifty at 18,392 at this point in time. All right. Well, Atul Suri is with us. He's CEO at Marathon Trends PMS. He's with us here in our studios. And who else to ask about where we are headed? Atul, good morning. Good to have you with us here. You know, technicians buy strength, and this is a very strong market by any yardstick, by any measure. Sure. So the natural course of action, one of the least resistance is, buy this. Lower, higher is buy this.
No, I think I've been saying this for a while, and of course we've had some hiccups in March or so, and I think thanks to the Adani thing, also India had outperformed globally a lot. So things are getting repaired globally, Prashant. It's not just India. You know, we look at the US, the S&P 500 is kind of stuck. I think it's doing a time-wise correction. But you look at markets in Europe. You know, when have European markets been the leaders? You'll find a lot of them, Germany, France, some of the Spanish markets breaking out to 52-week highs. Japan is at 52-week highs. So there's a lot of global repair in equity markets happening. And of course, India has been, was a big outperformer last year. You know, when they were making 52-week highs, we were making lifetime highs, if you remember, November. It was overdone. We have corrected. But I do think that India is again having another push-up. If you look at the internals of the market, okay, you may say Nifty is 3% from there, which is nothing, actually, which is really nothing. The Bank Nifty, I mean, the most important, the biggest elephant in the room, it's almost there. If you look at the auto index, when you look at the way auto stocks are, if you look at FMCG, that's doing very well. The PSUs have been doing very well. So what you'll realize is that a lot of components are kind of breaking out or giving advanced breakouts. You look at the mid-cap Nifty 500. You know, it's not just a large cap, it's not just FI driven. So you'll find that there is overall repair, and the best part is there's no euphoria. People are still sitting in cash. So it's very important that when you break out, you shouldn't be overextended. You shouldn't be people are going all over, falling over each other, leverage. In fact, people are sitting in cash. And that really gives you a sense that when breakouts happen, the move beyond the breakouts are large.
Arun, that's the only point where I don't know how to read it, because gradually, I mean, I've written it down, what percentage of people I speak to are bullish at what point in time. But now when I speak to people, 70-80% are they bullish? I mean, there's no euphoria, but people are bullish.
How many have borrowed money to invest in equity?
I'm not asked, I will ask.
So the fact is that
that is euphoria, which is not there.
There is no borrowing. You know, people have cash in the bank, and still you find this FD versus equity kind of things, you know. So you know that things are not really. And important thing is that when do tops happen? When do bubbles bust? It is at peak leverage. Where is the leverage in the market? So that clearly tells you that there is a lot more fuel, and when the rocket breaks out, the fuel will take it to another level. That is why I continue to be very bullish on India. Yes, we may have corrections. We may have time-wise corrections. We may have 5% corrections. Nobody knows, right? But the important part is that these are times to really deploy. And that's kind of my thesis. And as I said, it's not just the indexes, Prashant. It is you look at the internals of the market. The look at the number of stocks, I said last time, 52-week high versus 52-week lows. How many stocks are making 52-week high today versus lows? You see.
Yeah. Actually, when he walked into the studio, and his energy was quite palpable, you know. You were talking about the markets, and he was like, Sonia, I told you so, I told you so.
Atul is talking in space terms, rocket, fuel, stratosphere.
Yeah. So you know where that's going, right?
So at lifetime highs, you know, that's the only, what do we call the blue sky? So when you say blue sky, you have to speak about space.
But you know, I mean, just to kind of getting a little sanity into the conversation, right? This morning, Lawrence Blanco of CLSA put out a very interesting note, where he said that, because you mentioned global markets, I just want to put that note out. He said that global and regional equity indices are giving conflicting messages. So yes, the S&P 500, NASDAQ, Nikkei remain resilient. But on the other hand, Hong Kong, China markets are, you know, trading at the lower end of their boundaries. And this gives us a view that it's better to manage risk rather than add risk, because the current technical setup warns of a 5 to 10% correction.
For how long or how many times have Chinese market dictated global market trends? Or for that matter, Indian market trends. So I do think that, you know, yes, there may be issues with certain specific geographies, but we've all learned over years that China actually, or Chinese markets behave to their own tune. Ultimately, what matters, like talking about US, you know, this 4,200 on the S&P 500, it's kind of stuck. It's just about there, 41 plus. So I do feel that they are correcting. But the beauty is that the correction is time-wise and not price-wise. Corrections can happen too, like the market can tank massively and then again come up. Or it can just spend time. Even time corrections are very good. In fact, time corrections are more healthy because they frustrate people and all the weaker hands get out. And then the next move that comes is very, very near. So the 4,200 breakout, I feel, in S&P 500 will be a very big dramatic shift that will happen in global mood that there is. But again, I flip back to think I would rather put more weightage on Germany, Japan, France, rather than maybe Hong Kong.
You don't see a time or price correction coming anytime soon for the Indian market?
No, I think it can come. I think it can come. Remember, we've had a run from March, right? We had hit lows, and we've kind of had a vertical move. So definitely corrections can come, Sonia. But the fact is that as an allocator of capital, as an investor, I've hardly ever seen people time that 5%, 3%. It's good for traders, day traders, but as allocators, you know, betting, waiting for that 3%, 2%, getting stocks, who knows, the markets may correct 3%, but a lot of the stocks may continue making new highs, you know. So I think that trying to be too cute to like get the 3-5% is not. The important part is how are we shaping up? And I think globally markets are shaping up very well. They're repairing the damage that was done last year. And more so is that the internals are really telling me that.
All right. Hi, Atul. Good morning. Atul, you know, when you joined us the last time, you talked about the capital goods space, you know, the engineering goods spaces, where you said various sectors are looking up. Maybe L&T bounces back after a lost decade. Their numbers were a little bit on the downside. But how do you view this space from here on? And are you still as bullish on the space?
Yeah, so Nigel, my understanding over the years has been that the way our sector indices are constructed, they're very, very, you know, very bunchy. Let's take the PSU index. You know, it's been the only sector index that has been consistently making new highs. But the PSU index has PSU banks, it has defense, it has something to relate it to energy. So what we did at Marathon is we went out and created around 42 bespoke thematic indexes, where we classified these themes. So as per that ranking, the biggest trend that is playing out is the electrical equipment space. So net, there are only 10, 12 companies, right? I won't take names for obvious reasons, but the fact is that there are very big trends that are playing out. Because cap goods also is a very big industry. Yeah. You know, what do you find in it? So I think that I'm giving you something very, very specific. We feel that the whole electrical equipment play is really, really working out very good. The second sector where we think there's a very big trend is defense. Again, a subset of the PSU basket, but we don't have a sector, but we have created sectors. We find that defense was a theme that has played out very well last year. And that's the only theme which we feel continues to make new lifetime highs. As a disclaimer, they are both overweight positions in my portfolio. The third theme which I think is playing out very well are hotel stocks. Again, they have done well in the last year. They've consolidated and they've all broken out to new highs. And even the numbers, if you see, they're coming out very, very good. So what I feel is that these three themes are playing out. Fourth is something that may interest Sonia, is autos. If you realize that autos also, and more than autos, auto ancillaries. You know, so you really need to look at markets more thematically and in a micro way. And we feel that these four sectors are really what's leading things ahead. And they're all at lifetime highs. And that's why I feel that these are actually the leadership thematic or the trends that are playing out.
But for autos, you don't think it's too late to get in? I mean, it's already seen a big rally. Tata Motors is up, what, 20% this year already?
Yeah, I mean, we are getting happy with 20%. Like, you know, we've forgotten what 200% are. Because, you know, when you look at, I was just discussing with Nimish right now, that very often in these stocks, you know, we haven't seen these sectors perform for a decade. Capital goods, engineering, they have a lost decade actually. But if you go back and look back at 2003 to 2008, you'll realize that in that phase, it was a similar themes, similar stocks, similar sectors playing out. And then when you go and look at the price performances, then you'll realize it was not about 20%, it was how many times. So when the whole, you know, industrial cycle turns, or when the whole cap goods or the whole you know, the investment cycle turns, you'll find that the trends tend to be very elongated. Stocks are expensive, but then they just deliver phenomenal numbers. And suddenly what's very expensive becomes reasonable. And as long as the numbers keep coming, Sonia, you'll realize that the trend keeps playing out.
Actually, Tata Motors has not done anything for 10 years. Maruti is there at 6-year levels. I mean, same levels as 2017 or so.
Right.
Just the broader markets, Atul, small caps. Have you done some work there? Is it looking like that's the place to be over the next couple of years?
Absolutely, absolutely. Because, you know, at this point in time, we are record overweight in small caps because we are a multi-cap fund. And we find that we almost have a 40% allocation to small caps. Wow. And again, in that, Prashant, you'll find the themes that we are talking about are those engineering-related plays, those cap good plays. And you can see it on your screen also. You know, you mentioned a couple of stocks. You see the kind of numbers that are coming out. They are phenomenal. So overall, when you will look at Nifty numbers, you will say, okay, it's as per expectation, you know, beat little. But in some spaces or in some pockets, the kind of numbers being delivered are phenomenal. So I do think that there's a very big bull market playing out. There is more in the mid to small cap space. And it's more into these, you know, capital goods, engineering, unloved, as you said, a decadal underperformers. But I think there's a very big shift that is happening there. Even if you look at the US markets, you know, they have a theme called industrials. When was the last time industrials did well? But you go and look at industrials play out. If you look at it as a generic term, we call them as industrials. You see the way industrials are performing. So it's going to take a mental shift because we are so used to, you know, the tech and, you know, all that kind of play. We forget that even this can be a growth space. And I do think that's going to play out.
All right, we'll leave it there, Atul. Thank you very much for joining us.
Thanks for having
me. It's a pleasure having you with us.
Actually, I just had one question before we let Atul go. I mean, just coming back, because, you know, this market is in such a good mood. And if you look at it, give and take everything, it's not even a 1% rally this year, right? The Nifty has gained, what, 1.5% in 2023
so why do you look at it in 1 year? Let's take it at 5 years. Let's take it at 10 years. So the fact is that, you know, it's like that same, that fixed deposit versus equities. Yeah. I think that's very unfair when you look at it from a 1 year point of view. But you need to stretch it. Yeah, if you look at it from 1 year, it's disappointing. But the fact is that when we come into equities, you know, it's about 3 years, 5 years. You'll find that as an asset class, as a market, I mean, there's been nothing better as phenomenal as India. So it's about time, Sonia. Statistics can give you any output you want. It's just that you need to go and torture them enough. So if you torture them for 1 year, it's going to tell you what you want to hear.
All right. Before we wind this down, what about crude?
I think that's one of the best things that's happening. In fact, the sector that outperformed globally asset class in 2022 was commodities. And if you look at year to date, commodities is the worst performing. In fact, 23 is actually kind of a flip on 22. The best performing sector was crude. It's the worst performing. The worst performing asset class was Bitcoin.
It's the best performing.
It's the best performing. So 23 is actually emerging as an opposite. And I do think that crude is headed lower. I have a target of 65. But obviously, it's not a straight line. Hopefully, we'll get there and it's positive for India.
Okay, Atul, thanks a lot for joining in.
You.
It's always great speaking with you.
Thank you very much.
Great having you here in the studio. Hopefully, the next time we meet, the markets will be at all-time highs and more.
It'll get there. It'll get there.
It's just a matter of when and not if, right? That the market hits new highs. All right. Thanks a lot for staying with us. But let's move on. We have good numbers that came in from the likes of Berger Paints. The volume surged, revenues were in double digits, while margins also expanded quite a bit. Abhijit Roy, who's the MD and CEO of Berger Paints, is now with us to talk about that. Abhijit, good morning and thanks for being with us on the channel. Great set of numbers coming through. I think for the full year, you've done about 15.5% volume growth, which is remarkable, given that it has been a, quite a challenging year, give and take everything. What is the outlook for FY24? Do you think you can maintain this kind of 15.5% growth? Can you do better than that?
So yeah, it was a good year last year. So 15.5 overall, and actually the decorative grew at a faster pace at almost 17 plus. But whether that will sustain this year, last year we had some advantage in the first quarter. The growth rates were much higher. But we will have double-digit growth this year as well. That's something which we are reasonably certain about.
All right. Hi, Abhijit. Good morning. You've also said you've gained market share in FY23. What is it at? And double-digit growth you're going to be doing in FY24. Will you be outpacing the industry growth?
So going by figures, whatever has been published, only one or two in the space where it is traded space, I would say two companies has yet to announce their results, but going by what has happened so far and what we know about the market, I think we would have gained about 0.4 to 0.5%. We will be somewhere around 19.3 to 19.4% in terms of market shares in the Indian operations that we have. As far as so that's the scenario, and this year also looks good.
Sure.
Abhijit, hi, good morning. This seems to be on the back of very aggressive sort of push in distribution, all right? What I have is that you've added 8,000, more than 8,000 retail touch points in FY23, which is twice your usual run rate. What will you do in FY24? Will this increase in share continue? I mean, you've got to be available everywhere, right? So will the space continue?
We still have a lot of gap, especially in the south and the west, and that's where we are focusing our attention on. We want to put another 8,000 this year. So that's the aim, which we want to do. And we think that we should be able to do that and execute it on the ground.
I think just coming back to that market share question, that was a pertinent one, given that there is quite a bit of competition that's, entering into this space. I'm sure there could be a lot of, a discounting, perhaps a price war as well. You never know, given that large groups have now entered into the space. Do you think you may have to perhaps sacrifice on margins in the very near term in order to continue with, volume growth? And if yes, what is the ballpark range that you're looking at in terms of margins?
So, sorry, as of now, there is no competition. It's going to happen only towards the end of, the year. Q4 onwards is what has been indicated. All other players are already there, and I don't think we need to be overly worried so far. Yes, there might be some amount of intensification of competition towards the end of this year when the entry of one of the largest player there in the building material space happens. But we have to see how much of dilution is required or not required. It will depend on what the momentum is in the market for us. In that case, we may have to tactically do something, but that's something which only time will say.
So in terms of margins, just to follow up there, this quarter, in the quarter gone by, you saw a bit of a dip in your margins, but overall still holding on to that 15% level. Is that a benchmark that you're looking to hold on to even in FY24?
So there will be some improvements only because, the gross margin has improved, but there were some one-off expenses which we took this quarter, which was the Sandila plant which kicked off, so we had to spend some money there, which was, basically the recruitment of all the workforce and, managers, officers, etc. And plus some other expenses which were one-off, of nature, which will not come in the future quarters. There was also the Andhra Pradesh school project which we did, where there were some outstanding amounts, beyond 1 year, which we, took provision of, but which we will get back, either this quarter or the next quarter. So therefore, it dipped a little bit in terms of percentage in EBITDA, but that is going to move up again in the first quarter itself, and onwards it will be probably be, at a range of between 16 to 17%.
All right, 16 to 17%. Got that. A couple of more questions, Mr. Roy. If you could tell us, as of now, I believe your capacity utilization levels is around 50%. At peak levels, what kind of revenue can you do? You could correct me on the utilization number as well. And last year, you ended with revenues of around 10,500 crores. Peak revenue potential is how much?
So, the capacity utilization that you mentioned is for the Lucknow plant, which is around 40 to 50%. We started off in the month of February. And so in April, it had reached about 40 to 50% utilization levels. That will progressively move up as time progresses. But overall, the capacity utilization is at a much higher level of 78% almost, which is, perfectly fine. And, we don't see that, being a troubling factor. So that is how it is, in terms of cap utilization. We probably will improve on it, as the seasonal months come up.
So at peak levels, then maybe you could do around 12,500 or 13,000 crores with the current, gross block that you have.
That's right. No, even more, probably around 13,500 odd crores.
13,500. Okay, I just wanted some clarification on this other expenditure. That seems to have gone up a goodish bit. And if I compare other expenditure with sales, as a percentage, it's gone up by around 150 basis points. Why was it higher?
So that, as I mentioned, there were some one-off expenses which we took.
Okay, that's the one.
On the overheads, the overheads, resulted in an increase of about 1.2% straight away. And the advertisement expenses went up, this quarter. Last year, in this quarter, we had cut back a little bit. This quarter, the ad expenses went up. So when you see the results, you will find these two changes.
Just one final question. Last year, the industry on the whole had taken 25% price hikes, but it was quite a challenging year in terms of raw material costs going up as well. Now, with crude prices cooling off, will the prices be rolled back, or will the same prices continue? Any sense that you can give us?
So actually, Sonia, we did not or could not pass on the full price increases that happened in the raw material prices. So that's why you would have seen that almost all paint companies, the gross margin got contracted. We have, now reverted back to a normal status, whereby we are in the range of 38 to 40, where we normally remain in the gross margin area. So it's not as if, excessive amount is there and we need to therefore give away something in the marketplace. As of now, if these prices hold at the raw materials, I think there will be status quo in terms of the spends and in terms of the pricing which is there in the market.
Okay, all right. Thanks a lot, Mr. Roy, for joining in. Wishing you a good year ahead, and we look forward to chatting up with you during the course of the year.
Thank you.
Well, let's move on then to the next company, IGL. They reported a mixed set of numbers in the past quarter. Their margins improved, but they were lower than what the street was working with. The quarter four volumes, though, rose, while the EBITDA per SCM also came in line with the estimates. Mr. Sanjay Kumar, the MD of IGL, joins us on the show. Hi, Mr. Kumar. Good morning, and thanks so much for joining in. Well, I recall that you didn't take price increases some of your peers were taking. And now when the price cuts have come about, you have taken some price cuts. So I wanted to understand on the EBITDA per SCM, what should it look like for FY24 as well as FY25? If you could give us a broad sense, because, if from quarter one to quarter four, it's reduced from 8.1 to around 6.5. So give us a broad number. Mr. Kumar, you're on mute, I think. If you could unmute yourself, we'll be happy to hear you out.
Extremely sorry. Good morning and happy to be here. EBITDA per SCM for the financial year was 6 rupees 91 paisa.
Oh no, I think it's gone again on mute, Mr. Kumar. We want to hear you, so yeah. No, Mr. Kumar. All right, Mr. Kumar, we'll just reconnect with you. We've got that number 6.9 for the last entire fiscal, but for this year, we're waiting to hear about that. And also, we want to know, because you're getting more geographic areas, what could the volume number look like? I think you're back with us. All right, no, I think we'll have to wait Mr. Kumar, you're back with us. You were giving us the EBITDA per SCM. what could it look like for FY24? And maybe you could chip in with the volumes as well that you're looking at, since you've got some more geographical areas with you.
Yeah, so our EBITDA per SCM was 6 rupees 91 paisa for the last financial year. For this financial year, we estimate it to be 7.5 rupees to 8 rupees per SCM. And that is the likely range that we may continue for the year 24-25 also. Regarding volume, we were at 8.1 million cubic meter last financial year per day. We estimate that to be in the range of 9 million cubic meter per day for the ongoing financial year. And this will be mainly on the back of a few infrastructural, improvements. The commissioning of steel pipeline that is going on, it's already in process in our new geographical areas in Ajmer and Kanpur and Muzaffarnagar, and that will lead to higher volume, higher sale. And we estimate the volume to be about 9 million cubic meter for the ongoing financial year.
Okay, so 9 million cubic meter per day for the ongoing financial year, that's for FY24. What would this translate into in terms of earnings for you? I mean, what kind of, in the quarter gone by, your revenues were flat if you look at it on a quarter-on-quarter basis. But what kind of earnings growth do you think you can generate in FY24?
So we estimate our PAT to be in the range of 1,600 crore rupees for this financial year, based on the higher volume as well as the maintaining the margin. Presently, we are earning this month, we are earning about 7.5 rupees per SCM EBITDA. So our PAT is likely to be in the range of 1,600 crore for the FY24. That is our estimate.
Okay. Earlier you had told us, you have plans to become a pan-India company. So there was this assumption that there could be some acquisitions coming through. Anything that's on the horizon and anything that you would be looking to close in this calendar year itself?
So these are, strategic discussions, and we can come to you only when they are concluded. As of now, we have nothing to inform you about.
All right. Mr. Kumar, PNG RBI, they had resolved those multiple outstanding authorization issues. And from that, the geographical areas that you've got access to is Greater Noida, Faridabad, and 30 to 40% of Gurugram. Now, looking at a brokerage note, and they are estimating additional EBITDA of close to around 220 crores. This is as per ICICI Securities note. Do you agree from these new geographical areas, you can garner close to around 220 crores?
So PNGRB has, allotted the eastern part, about 1/3 or slightly more than that part of Faridabad to IGL. And the incremental part allotted to authorized to IGL is very little. It's the Pataudi area to the west of Gurugram, west-south actually. So we are studying the order because let's not forget IGL is a central government authorized entity for these two geographical areas, and we will take appropriate decision in this regard in few days.
Okay. So, you said there is an EBITDA of 7.5 to 8 that you're looking at per SCM in this year in FY24. Can you tell us what is the cost of sourcing currently for you? Earlier you had said it's at about $9.78 per MMBTU. Has that changed in any way, and what is the expectation in FY24?
For the, I'll go financial year wise. For the year 21-22, we had cost of sourcing of gas at about 17 rupees per cubic meter. For the year 22-23, the last year, our cost of sourcing gas was about 35-36 rupees per SCM, which is almost double of the year before that. This year, we estimate this cost to be around 25 rupees per SCM, on the back of this Kirit Parikh committee report, as well as softening of the LNG market world over, which is having a downward pressure on the pricing presently. The LNG prices have gone below $10 now, and that's good for all the CGD entities and other gas consumers in the country.
All right, we'll leave it there. Thank you very much, Mr. Kumar. Appreciate you joining in and running us through all of those details. Thanks very much for your time here on CNBC TV18. Okay, well, that is IGL. I mean, we already had numbers from MGL earlier, and that's the city gas distribution space coming through with earnings. Well, we got the market, which is come back in the green. We are up about, what, 7 or 8 points now at 18,407. We'll take a very quick commercial break here. When we come back, we'll have the management of Coromandel International to discuss their fourth quarter performance and, of course, the outlook from them for FY24. Stay tuned for that conversation. Okay, welcome back. The markets are picking up pace. From the lows, there has been a decent recovery which has been seen. The Bank Nifty, though, is still in the red, but that has also come up. We're down on the Nifty Bank by about 80 points or so, 0.17%. Look at Manappuram. The stock should come up on your screen. It's up about 5.5%. At 116 rupees now. So that's a decent move. Astral, the company reported earnings. It's up 5%. It's coming up as a big gainer now. Vesuvius, Repro are names I mentioned earlier. ITD Cements we mentioned. Look at Sequent Scientific. That's coming up with a 9% move, by the way, on the back of very strong volumes here. And Alembic Limited, Skipper, this is a mid-cap market. Renuka, GIC Housing Finance, all in the range of between 2 and 5%. On some of these names. Market breadth is 3:1 solid in favor of advances. Now, Coromandel International reported a mixed set of numbers for the fourth quarter. Revenue saw a very good 29% jump, but margins and profits came in lower. I think in the quarter there was the impact of high raw material prices, which of course now are coming off. Jayashree Sathagopan is President Corporate and Chief Financial Officer at Coromandel International. She's joining us right now to take some questions. Ma'am, good morning. Good to have you with us here. Thanks very much for your time. Can you just start there? What happened as far as margins are concerned? And I think one thing everybody wants to know is, how much of high-cost inventory are you sitting on? What is the situation there? And how much time will it take for that to pass through your numbers?
So good morning. Coromandel actually during the quarter and the full year has a good set of numbers. What we have seen even during the quarter across the businesses, be it fertilizer as well as crop protection, is a good margin. We're not sitting on any high cost inventory at this point in time. However, given the sharp reduction in the raw material prices that we have been witnessing over the past few months, we are expecting a reduction in the subsidy rates from the government. And this is likely to be done in 2 stages. One as of 1st January 2023 and the other one 1st April 2023. The NBS rates have not yet been announced. And as management, we have taken our best estimates to factor in the reduction in subsidy rates. And that probably is a reason for a slightly muted Q4 performance in terms of margins. But if you were to compare EBITDA per ton, vis-a-vis last year, the company has tracked pretty well.
All right, hi ma'am. Good morning. What is the EBITDA per ton guidance? I think last year you had scaled it back a little bit, but you have various measures like backward integration as well that you're looking at, and various other measures that could help this EBITDA per ton to trend higher. Could you tell us what is the number likely to be? And sometimes, you'll break it up in the first half as well as the second half of the year. So give us a broad number.
So normally we look at a full year because this industry is seasonal. We produce and sell during the peak season, which is Kharif, and there is sales in Rabi as well. So one needs to look at it on an annualized basis rather than breaking up into quarter or half year or season. So from our standpoint, a lot of things that have happened in the last couple of years. One is backward integration. We put up our PAP plants. That's working extremely well. The SAP plant is currently under progress, and it should get commissioned by around July, August of this year. So that's another good way of getting backward integrated. And most importantly, we have also invested in the mines in Senegal. Apart from this, the manufacturing facilities have developed the flexibility to process multiple grades of raw material, multiple types of rock, so on and so forth. All of this operational efficiencies is also helping us to shore up the EBITDA per ton. I think about 5,500, 6,000 rupees per ton would be a good number for us to look at on an annualized basis.
This compares with what in the last year?
It will be in the more or less in a similar range. There could be upsides. But with the raw material prices moving, we are still not certain about the subsidy rates from the government. We should look at a broadly similar range in the coming year as well.
Okay. So can you give us, I didn't get the volume breakup. What was the exact volume breakup of this quarter? What did you do? And what is the expectation as we move along, both in the first quarter of the new fiscal as well as annually? What are you looking at?
So we have seen a volume increase during the year. The overall sales volume has gone up by almost 10%. Ours is primarily in NPK, so I'm talking a little bit on the fertilizer front. We have seen a similar traction happening on the other businesses as well, whether it is specialty nutrients or crop protection. So there has been a growth across all of these businesses.
Okay, so you said 10% is what you've seen so far. What does this mean in terms of realizations? How much of the realizations gone up in FY23 overall, and what is the expectation in FY24? What kind of volume and realization growth can you eke out?
The volume growth could be anywhere between 5 to 10%, depending upon how the season is going to come in. While IMD has forecasted normal monsoon, a couple of days back, we are also seeing that there is an El Nino that is being talked about. Having said that, the water reservoir levels are good, soil moisture conditions is excellent. So Kharif should see through. If there is going to be an El Nino impact, we probably will have the impact coming in Rabi. So we do see a volume growth. There's been a lot of debottlenecking happening at the plants. That should also help us in augmenting volumes apart from looking into opportunities for import. That's primarily on the fertilizer side. On the crop protection, our focus has been more to get into specialized molecules. While there are a lot of generic technicals that we are manufacturing, the new products that have got introduced, almost 6 in number last year, have gained very good traction in the market and exceeded the internal targets in the budgets. Couple of new technicals have started their manufacturing in our plants. There is also an intent, an action that's being taken to foray into adjacencies like specialty chemicals, which we announced a couple of months back. So adjacent areas, diversifying, using our own manufacturing infrastructure, capabilities, expertise is another area that we are looking into. We are also looking into moving into CDMO. That is another area that has been identified.
Okay, ma'am. I wanted your thoughts on the nano urea, nano DAP opportunity. I mean, I'd spoken with the fertilizer secretary about 7 or 8 months back, maybe around that time, and he was saying that the government is extremely upbeat and excited about this and what this can do for, how this will cut down imports, especially if, overall the fertilizer import bill will come off drastically. It's much better bang for the buck, etc. Are you already producing this? What is the opportunity overall, and how are things progressing?
So we have obtained government approvals for nano DAP. This has been developed in-house by our R&D team. And we have done extensive trials in the field, in the markets, and the response has been encouraging. We are setting up a new nano DAP facility, which could produce about 4 crore bottles of nano DAP. We think in a longer term, there could be a substitution, especially for foliar applications, right? When nano DAP is being used, up to 20 to 25% is what we think. But, these are very early days. The first year when nano urea has been introduced, the response has been mixed from the farmers and the field. It will take 2 to 3 years for us to look into the product efficacy, make necessary changes. A right beginning, but some way to go.
Okay, very quickly, ma'am, if you could fill us with a couple of details. You announced the entry into specialty as well as industrial chemicals, as you just mentioned, some diversification, crop protection chemicals. Could you tell us, you're going to be putting 1,000 crores. What is the, the revenue potential from this investment? And this will start reflecting from FY 25-26?
Yeah, we are looking into almost 1,000 crore of investment that goes into diversification, setting up new multi-purpose plants, primarily for the crop protection chemicals, and also leveraging the competencies into specialty and industrial chemicals. We expect, say, about 2,000 to 3,000 crores of revenue to come from these assets over a next 2 to 3 year time frame.
Okay, all right. Thanks, ma'am, for joining in and speaking to us about the business and about, the way forward. Let's just get a quick call in on the markets as well. The Sensex and Nifty are not doing much, but it's the mid-cap index which is on fire today, almost 300 points higher. Mitesh Thakkar is back with us. Mitesh, give us a quick sense of how you would approach the rest of the day. Are you going to book out of your longs, and what are the stocks to look at?
Good morning again. We haven't done that, but I think the Bank Nifty start was slightly surprising and on the negative side. But what I would suggest people to do is to trade their stop loss at about 43,650 on the Bank Nifty. Now, that was the hourly high we got on the 4th of May and important pivot level on the intraday chart. So as long as we are above that, I think maintain long positions. But yeah, I think, the morning reaction was slightly on the surprising side, though I would have expected, with the SGX showing positive numbers, would have expected a fresh high. But these kind of things can happen near the earlier highs, and therefore trailing the stop loss is the best idea. On the stock side, PFC is on the buy list today. Keep a stop at about levels of 169, look for targets of 182 on the upside over here. And Aurobindo Pharma, the stock was doing very well and then was consolidating for the last 2-3 weeks, has given a fresh breakout. That's a buy.